Hi guys, in this video I'm going to show you some of the best cheapest stocks that you can buy right now. I'll be very quick, so please stay with me until the end of the video so that you will get to know why I selected these stocks. The first in my list is United States Steel Corporation with the ticker X. This company produces high quality steel products that is used by automakers to produce lightweight vehicles. This company supplies steel not only to the automobile industry, but to the construction sector, appliance sector, energy, containers, and packaging industries. It has an ability to produce about 26.2 million net tons every year, and it operates not only in the United States but also across the Central Europe. It is currently trading at $19.76 with a market cap of 5.29 billion. If you look at the 1 year chart, last year by the same time it was trading around $20 and it went all the way to $40. From there it pulled back twice, once at around $25 range and the second time to reach a new support level around 17.5. This seems to be a very strong support line and it has lots of bullish signals for upward momentum. Its profit margin is about 22.73%, which is amazing, and its revenue is $21.85 billion. Its quarterly revenue growth is about 42.8%, and its quarterly earnings growth is about 869.2%, which is really awesome. And it has a total cash of $2.87 billion. Majority of the shares are being held by institutions, about 76.87%. It also gives an annual dividend about 1% and it has a payout ratio of 0.68%. And its price per earning ratio is 1.16, which is definitely undervalued, and its earning per share is about 17.55. So you can imagine that this stock is going to do well in the next couple of months. Its earnings are also due this week. A majority of the analysts are very bullish on this stock, and an average price estimation is about $24, which is the first resistance level. The moment it breaks this resistance, it can go all the way to $44, which is about 123%. The reason why I'm so bullish on it is it opened a new steel mill in Arkansas, and on top of it, it established a very nice strategic investment and partnership relationship with a leading robotics and AI studio in Pittsburgh. They wanted to accelerate and scale industrial automation by advanced robotics and AI. Therefore, I believe that this is one of the best stock to buy right now. The second on my list is Energy Transfer with a ticker ET. The energy sector is doing great even during these tough recession times because of this current administration. That's probably one of the reasons why this stock has been in spotlight recently. It operates a massive network of 120,000 miles of pipelines across North America. You can imagine that 30% of America's crude oil and natural gas is moved through these energy transfer pipelines. And it owns natural gas gathering and natural gas liquid pipelines, processing plants, and treating and conditional facilities. It sells natural gas to electric utilities, independent power plants, local distribution, and other marketing companies and industrial end users. This stock is currently trading at around $10.25 with a market cap of $32.61 billion. If you look at the 1 year chart, last year by the same time it was trading at around $9 or so. And then it went down to $8, and from there it gained support and momentum and it rallied all the way to $12.5. It tested a couple of times to break that resistance but failed. It has dropped to $9.8, which is the new support line. Now there are a lot of bullish signals signaling to the upward momentum. It has a decent profit margin of about 4.86% and its revenue is about $70.91 billion. And its quarterly revenue growth is 20.6%, which is really good. It has a total cash of $1.1 billion. About 40% of its shares are held by institutions. And more importantly, the annual dividend yield is really great for this company, which is about 7.72%. The price per earnings ratio is about $10.10, which is a net fair value, and its earnings per share is about $1.05. Its earnings report is due next week. Majority of the analysts are very bullish in this stock. The average price estimation is about $15, which is 46% above the current trading value. and it can go all the way to $20, which is 94.8% above the current trading price. The reason why I'm so bullish on this stock is because it has signed multiple long-term agreements. For instance, 25-year agreement with China and about 18-year agreement with North Korea and about 20-year agreement with Singapore. You can see that this company is not just providing natural gas within the United States. It is planning to export natural gas to Asian countries with a long-term agreement. And that's the reason why this is my second best pick. My third and final pick is Ford with a ticker F. It does manufacturing, distribution, and sales of automobiles. It operates in multiple segments. For instance, the automotive mobility takes care of developing manufacturing of both Ford and Lincoln service parts and accessories. And the mobility segment focuses more on the autonomous vehicles, equity ownership, and Argo and AI. The other segments include Ford Credit that controls financing and leasing activities. The corporate segment controls the governance expenses, interest income, gains and losses from cash. And the special item segment mostly controls the pension and employment benefits. Ford is currently trading at $12.82 with a market cap of $51.55 billion. If you look at the 1-year chart, last year at the same time, it was exactly trading at the same price range. From there, it went to $20 and then all the way to $26. Since then, it kept falling until it reached its support at about $10. Now it is back to its last year's support level. This is definitely a very nice entry point for this stock. It has a decent profit margin of about 8.59% and its revenue is about $134 billion. It has a total cash of about $28.61 billion. 53.82% of its shares are held by the institutions. It gives you a decent annual dividend yield of about 3.18% with a payout ratio of 6.99%. Its price per earning ratio is 4.55, which is far better than its industrial peers like General Motors and Tesla. So therefore, it's definitely undervalued. Its earnings are also around the corner this week. Some analysts believe that this stock can go to $32, which is 148% from its current trading value. The average price target is about $14, which is 8.7% from its current trade value. There is a pretty high chance that the Ford is going to beat the estimates. Therefore, since the support line and the resistance line were so close, with a decent earning report, it can rally to $20 in the next couple of weeks. The reason why I'm so bullish on this stock is because Ford already outperformed the industry in June because the sales were up about 31% on strong F-Series and SUV mix, and particularly the F-150 Lightning is the best-selling electric truck in June as EV vehicle sales jumped 77%. On top of it, even the Lincoln SUV sales are up 44%. That is the reason why there's a high chance that this can actually beat the earnings estimates. On top of it, it signed an agreement with Ioneer for lithium carbonate batteries. As a part of this agreement, Ioneer is supposed to provide 7,000 tons of lithium carbonate per annum for the next 5 years. It also released a very ambitious plan for sourcing battery capacity and raw materials to reach its targeted annual run rate of 600,000 electric vehicles by late 2023 and more than 2 million electric vehicles by the end of 2026. It has also partnered with the world's largest battery producer, the CATL, the Chinese giant. The two companies intend to jointly explore new business opportunities worldwide to promote global electric vehicles. By doing this, Ford has established a groundwork to match Tesla's electric vehicle production. That makes it one of the best stock to buy right now in the EV industry. That's it for now. If you like my video, please subscribe my channel and thank you for watching.